Hello everyone. This is the pre-market report video for today, 3rd June 2024 for the Indian stock market in terms of Nifty and Bank Nifty. I mean, there is no point in looking at what happened in the Indian market on Friday because it's completely irrelevant now. However, I will list out the positive things which in favor of market and the negative things that can potentially stop the rally, and also we can discuss about the Nifty's grey market status. First of all, the very most influential factor today will be exit poll results. At present, everyone might already know. But just for everyone benefits, if required, please pause and have a look. Almost all the news agency exit poll predicted that NDA ruling party will win above 350 seats. So it's the continuation of the stable government. Historically, in 2019, for the similar situation, on the following Monday after the exit poll result release, Nifty opened 2.2% gap up. The 2.2% gap up is roughly equal to 500 points in today's Nifty's range, which all those details we discussed in the last two videos which I uploaded during the weekend. So this is the first strong market influential fact. Then second, on Friday, India's Ministry of Statistics released the GDP data, and on Q4, between Jan to March quarter, Indian economy grown at 7.8% against the analyst expectation of below 7%. Whereas if we take the whole year in FY 2024, Indian economy grown at 8.2% against the analyst expectation of just 6.5 to 6.7%. Just for comparison, last financial year FY 2023, India grown only 7.2%. So this present value 8.2% is really very good growth. Thus now India retains its fastest growing major economy tag. Then another important macro, Office of Controller General released the fiscal deficit data, and again the data came as very good, just 5.6% against the target 5.8%. And finally, Commerce Ministry released the Indian infrastructure output, and for April month compared to a year ago, it grown 6.2%, which was 0.2% higher than the forecast. Overall, very good GDP data, very good fiscal deficit data, and slightly positive infrastructure growth. So just in case today if there is no exit poll result means, then this macro data itself got the ability to make the Nifty to gap up open of 100 to 200 points. It's really phenomenal economy macro data which completely gone unnoticed in the last 2 days. Then the third positive, global momentum. On last Friday night before the US market opening, Department of Commerce released the widely expected PC inflation data. If required, please pause and have a look. Almost all of them except core PC inflation in month-on-month basis. Other than that, all comes in line with the analyst expectation. Here, core PC inflation is more important. As you see, on year-on-year basis, it increased 2.8%. There is no surprise. However, on the positive side, on monthly basis, it increased only 0.2% against the expectation of 0.3%. So as a whole, the data is good. It is what the market expected to be, and because of this good data, Friday night Dow Jones increased near 600 points. However, Dell, one of the index heavyweight in Nasdaq, fell over 17% as they forecasted lower quarterly profit than the estimation. Hence, Nasdaq alone closed flat to negative, whereas Dow Jones was up by 1.5% and S&P 500 increased 0.8%. In case of VIX, it crashed over 10% and dropped below 13. So Nasdaq negative close was just because of one stock. Other than that, global momentum improved massively because of this low PC inflation data. Then the final positive, last Friday's MSCI fund inflow. If we see the FII trade data, usually FII trades for 10 to 20,000 crore rupees, but last Friday the gross bought for 95,000 crore rupees and gross sold for 94,000 crore rupees, which was a massive amount. Then I found MSCI rejig added near $2 billion into the Indian market. Roughly 17,000 crore rupees came into the Indian cash market. So in a short term, that will also contribute on the positive side. I mean, it didn't influence much on last Friday because SEBI's index reject framework was in such a way that this massive fund inflow shouldn't cause sudden increase in the Indian market. So these were the positives. On the negative side, it's only one, profit booking. Tomorrow is the election results day, so most investors don't want to carry their positions overnight, especially the option sellers. You might ask me why I'm telling just option sellers and not option buyers. Because for option buyers, their profit will be unlimited. So most of the time they will be little bit bold and will play it out tomorrow. But for option sellers, their profit will be limited. So when they cross the 50% of expiry intended profit, they will try to square off their position, which again might create the domino effect. I mean, even in the last video, I mentioned this. At present, in index future, FII was holding 86% short position, whereas DII in individual stocks holding around 96% short. Only retail people got more long position in both index and individual stock. There also, if they profit booked it today, then that will trim the rally. So, as a summary, 4 positives: exit poll results, Indian macro data, US market positive close, and so the global momentum. But on the negative side, it's just profit booking, and the panic to close the position before tomorrow market might spoil the party. Then regarding gift nifty, Saturday morning close is irrelevant now, and the present time around 5 a.m. Indian Standard Time, it haven't opened yet. However, I found this from MSN website. Apparently in the grey market, Nifty jumped over 500 points and trading above 23,000 mark. Honestly, I was expecting only 250 to 300 points gap up. Looks like I'm wrong and underpredicted it. Moving on, about the things to look out. Before our market hours, China manufacturing PMI data is due, and that might dictate the Asian market. During our market hours at 10:30 a.m., India's manufacturing PMI data is scheduled to release. Then between 11:30 to 2 p.m., both whole and individual various European countries' PMI data. Finally, in the aftermarket hours, various US manufacturing PMI data are some of the items we need to keep an eye out today. Coming to technical, again, last Friday's price action is irrelevant now. However, I like to highlight some. I mean, I can sense there was a general consensus among investors that India VIX will fall heavily today. But honestly, I doubt it. Even on 2019 on Monday, India VIX fell, but at the end of Friday, it increased back to 28, where it was on the Friday close. So I don't think India VIX will collapse. Rather, I expect it will start to fall after Tuesday. I mean, after the result announcement. Anyway, today Nifty likely to hit 23,000 mark. Thus, the immediate resistance will be 23,200, whereas the Friday's close 22,500 will be the strong support. In case of Bank Nifty, 21-day exponential moving average 48,500 is the strong support and 50,000 mark is the immediate and psychological resistance. Then as per the weekly options data, the maximum call option open interest was at 23,000 strike followed by 24,000 and 23,500 with maximum call option writing at 23,000 strike, then 23,500 and 24,000. Whereas on the put side, the maximum open interest was at 22,000 strike followed by 22,500 and 21,500 with maximum put option writing at 21,500 strike, then 22,600 and 22,500. Thus, from the options data, 23,000 is the decider, 23,500 is the resistance to break, while on the lower side, 22,500 is the key support to look out. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.